We are going to take a look at ES, the S&P futures, on multiple time frames, all the way from the quarterly, because we're keeping an eye on that candle because it closes on Friday. So that's a super important indicator. The top down point of view, that's such a powerful quarterly candle. This is going to be, it's going to tell our story from the upside down. And then we'll take, so stick around. We're going to take a look at VIX, because ES is going to tell us one thing on the lower time frames, but it's really kind of jumbling around the 4,000 area and fumbling around and not looking clear, especially for Elliott wave counts. And so we're going to take a look at the VIX, because I think the VIX is much more clear. So stick around for that. Okay, we have ES on the quarterly time frame. Look at this candle. Somewhat of a reversal candle, not a real strong. Still, it's inside of the range of last quarter. Not strong, not quite weak. It's just about a spinning top at this point. It does have a longer tail, but we'll determine later. We'll take a look at it. We're getting that bearish crossover here on the quarterly MACD as well. We'll take a look at it again tomorrow. So let's go down to the monthly time frame. And on the monthly, and by the way, we do these videos all the time, so hit that notification bell. All right, looking on this monthly time frame, holding this trend line that we've had here for a little bit of time, that would be our trend line for the ascending triangle setup. That would be a bullish setup, assuming that price breaks above this 20 moving average. Okay, a breakdown below this would be pretty devastating to the market. But just taking a look at this from a moving average point of view, the 8 EMA, sideways. In one word, sideways. 10 months. Nothing more to say about this chart. We're waiting for direction. On the weekly time frame, don't forget to hit that like button. All right, falling from the ascending triangle, we are making lower highs and lower lows. We're hitting the midpoint. This is the lower point of this channel, but this is actually midpoint. It's a larger channel. So lower highs and lower lows. We are still in a bear trend. This turquoise bottom of the channel and this white line are indicating like a triangulating, getting real tight. Point of decision somewhere around this apex. Yes, we could go a few more weeks sideways. I don't have control of that. It could be, but with the quarterly candle ending here soon, I do think that's going to free up some ability for this market to start moving. I can't imagine a yearly candle really being just a little indecision doji. Hey, anything's possible. But right now, price is starting to push above the 8 EMA, the 50 and the 20. So again, firming up. It's looking good so far. Really pressing on the bear point of view. I get it. I still stand bearish. I'm sorry. I've put positions, and I will keep entering puts, and until I am proven otherwise. And I will indicate it on this channel, but I will give you a bull perspective as well. You know, for people that are bullish, you know, this could be an ABC up. For an A or a 1 going into an ending diagonal in the big scheme of things. And then this would be a wave 2. And then you're looking for a longer, or I guess an impulsive wave 3. But it should be a 3-wave move up to a 3 as well. I don't want to get into all that. But just look for price to break above this area for the bulls in the long run. And this area for the bears. This is a triangle. It's triangulating. It's getting tight in price. Okay. Going to the daily. Trend is my friend. You see the triangulation in the MACD and the RSI showing the same concept, what price is doing. And here's my bearish standstill. We had our ABC correction, and now we broke down from it. Back tested, broke down again, back tested again. We got above resistance, which is the 50-day moving average, and we're coming right back into that same resistance there into GDP tomorrow. Do I think this breaks down? That's what I'm going for. That's what I'm playing. So I put my money where my mouth is. We do have a bullish cross on the MACD, but that doesn't mean much as it's getting towards this apex. This could start to curl down again. It can go up further. It's such a rigid area. This trading is, although you see these large moves, it's not easy because price action isn't trending like this one here, where you can swing for a week and make profits, or even a few weeks to make profit. On here, you if you don't get out within 1 or 2 days if you're a swing trader, you're done. All your profits are done. That's what's been going on here. Down, up, down, up, down, up. 2 days up, down, nowhere, grind, and then up. So this is, I get it. It's very, very difficult. You would have had to held on to a 30-day call position or a day trade, or if you're not a day trader, if you're a swing trader, hold on to your 30-day call position all through this mess, just sweating it out, hoping and praying. That's not how we play. This is to me in a bear stance. We're past that, or right about at the apex of this triangle type Titan, and I believe that it looks like about the 40-50. It looks like we're at it right here, and I think it's time to make another decision whether that's down or continue to the upside. But even then, we have more confluence up there. I can't consider myself a more of a bullish stance unless I see structure, first of all, an actual bullish structure and a break above this confluence here of that about 4170 area. It doesn't mean that I'm riding it puts all the way up there and just trying to lose money. So don't get me wrong on that. I'm just trying to give perspective so you can ride the trend. This is not a trend. You can call it an uptrend if you want, but that's not a trend. This is at least more of a trend. We're waiting for the next trend to really start happening, so that's why we keep positioning ourselves in a bearish stance at this point. Okay, sorry about the rant. To go on, we have the 65-minute. Let's see what we can notice on here. Switchboards up. Okay, now this bearish flag that we have, I think is complete. This is not negated. This is not invalidated unless we get a new high here. And then we have to look to see if we're still going to ride this channel, because maybe this is a complex correction at that point as well. Okay. I did draw a little line here, and it just so happened we ended up at that point. So let's see how this holds overnight and what we get for GDP. For some reason, tomorrow, I don't think it's going to be pleasant for the bulls. I think it's just going to be a pull the rug type situation because of how it's setting up. It's kind of, I see that 5-wave move down here. I count that, and then we got a 3-wave move up for a correction, but it's real deep. So it's really pulling in or getting the bears out and pulling in these bullish players, and I just don't see it happening. I could see this going the opposite way real hard and real quick. And on that note, because the quarterly is ending, I think, or even the weekly candle, I believe that between tomorrow and Friday that it could be a real big move. And whether that's up or down doesn't matter. But that will really represent what's going to happen coming into the next quarter, month, week, day. Because if we have these real bullish looking candles ending on the quarterly, that's really going to push into all these other plays. We should start stretching to the upside if we're a bull. And for the bears, we should see this reversal happen into the quarter. We shouldn't have to wait for that quarterly candle to look bullish and then get a bearish candle after it. That's just not quite typical. It's possible. Anything's possible. But this is a bear flag so far. That should play out. We should have a big move, probably GDP. If not GDP, then both GDP and the PCE on Friday. Again, I don't care what those numbers are. It doesn't really matter to me, but they are catalysts and they will move price. And so price will be the arbiter, whether it's bullish or bearish. I'm playing to the bearish side. It's not financial advice. It's I'm showing you educationally what the setup is to the downside and what the setup is to the upside for you to figure out yourself. So let's go over to the VIX, and then we can end this video and get ready to trade tomorrow. I look forward to it. We need some price action, you know. We need some real price action happening. So, okay, we'll go ahead and look at the daily time frame on the VIX, and then we'll move down to the hourly just to get a closer look. But if you notice this line here that we've had this channel on. We've had this channel on for quite some time, and we talked about buying the VIX here. We talked about this wedge really forming into the bottom of this triangle and the bottom of the channel here. And I kept stressing and pounding on the table, hey, if, you know, either the market is really bullish and we're going to get down in this territory and stay down there, and we should see all-time highs, but I not likely getting into support with positive divergence and the wedge break, all that happened, okay? And we're in basically the same situation again. So you see us coming right into closing with the gap down. I think this is possible candidate for abandoned baby, where we get back up into the morning at 8:30 in the morning into the open, where it's possible that we gap back up, have an abandoned baby, and we gap and go. That could happen a little differently, could play out differently, but we do have a little bit more support below from this triangle as well. So and to get a better look, let's go on the 65-minute. And this just seems so much more clear to me. Just another wedge. See, the wedge could fill out a little bit more. So maybe GDP does one thing to where price action goes up just a little bit more and the VIX falls down to the bottom of the wedge, creates more divergence positively. And then maybe the PCE on Friday really, after the bulls are all in, really just, you know, flails to the upside for the VIX, and then the market starts turning again at like 8:30 in the morning. Of course, before traders can do anything unless you trade futures, okay? So we're right at that support. Price did nothing for the VIX. It just laid out flat right on that support. You know that's a good area. We've had that area for a long time, and so we know that's good. And we'll see if we pop down and then do a little fake break, or if we just gap up tomorrow. I think those are two of the more likely situations, and I think the VIX is pretty clear on what's going to happen, and that is not for the market. It's not good, because I don't see the VIX just kind of flailing down to the downside and we go to get all-time highs. It's not set up for that. That's not what's setting up, okay? So that's my piece. I say the VIX is the winner here. The buyers are not buying the market. The buyers are buying the VIX. Thanks for joining us. Don't forget to like the video, and we'll talk to you tomorrow.